My name is Ragnar Hellenius, and as Petter said, I'm going to assume the responsibility as CFO from 1st of July this year. Before I start, as a newcomer to Unibet, I have the privilege to actually look at the company from an outside perspective. And given a previous professional career of actually assessing companies' weaknesses as well as strengths, let me share 3 observations I made during the first 2 months. This is a truly great company. Why? The structural capital built in this company constitutes a unique platform for future growth. Our sportsbook is the DNA of this company, and it's been recognized as one of the best in the industry. This company was established by an entrepreneur, and I claim that all employees have actually taken that legacy into their own day-to-day work, trying to act as good entrepreneurs, finding creative solutions. Secondly, Unibet has a proven track record in delivering value and growth. I'll give you some numbers. Since 2002, top-line growth has been 54% compounded annually. The same number for EBITDA is 100%, all organically, taking out the effect of Mr. Bookmaker. Also, that part of our history in buying and integrating a company, really speed it up and get it going with our culture has been very successful. Lastly, this market offers ample opportunities for future profitable growth. Just look at leisure demand. It's increasing and it's counter-cyclical. Most EU markets which we operate in and will operate in is actually embryonic. And the professionalization of the industry is low, so when you raise that in terms of operations, working as an industrial company, will raise the level for the whole industry. And just in summary, we are an attacker, not an incumbent. And we're going to benefit from that, as all attackers in every industry has been doing forever. We've tried to encapsulate what the company is all about, and it's described with 6 pillars. The first one is leadership. We will only enter markets where we believe strongly that we will get a number 3 position. Our brand is global and used for all products, all markets. Our business model has been built on a horizontal approach, which means that besides the sportsbook, which is a proprietary software in-house, that for all other products, we will use the best available supplier at that point of time to create value and speed to the market, which in turn will give higher returns. We're all about digital and only for online demand. And as Petter said, we take great pride in being on the forefront of securing responsible gambling. Finally, but not last, talent. This company will always try to hire and reward high performers. Out of these pillars, and given the history and our view on the market going forward and the view on the company, we think that there is time to actually set a new set of goals. As you see here, these are the previous goals we have outlined in the report. Going forward, we will use on the profit and loss, obviously the gross winnings, divided in maturing markets and growth markets. Maturing markets is defined as high single-digit numbers in growth, very good broadband penetration, and a fight over market shares, where the growth market is more early in the S-curve. We'll also use EBITDA to make sure that we always deliver profitability and that we have a very high return on capital. In addition to this, we will focus on a different approach to the balance sheet, meaning that we will try to, at the point of time when needed, raise debt when needed to a ratio versus EBITDA. And lastly, our overall aim would be to focus on delivering return to shareholders, obviously, including the dividend yield. And the last ones are guidelines, while the profit and loss is set in a number of goals, as you've seen in the report. The drivers behind this, from a market perspective, you see on the board here, it's about consolidation in the market. We think that there's going to be equal terms in terms of how you compete versus monopolies. We also believe that the brand, user experience, and offering will be success factors and will distinguish the good from the great. We also believe that the top three position is going to be paying off in terms of returns, and scale and the time to market, as said previously, is going to be very important. For our company, this means that on the top line growth, we will benefit from leveraging a new platform front in all markets. We will create the equal strong foothold in our core market, being the Nordic. That will be added with strong growth in Southern Europe, Eastern Europe. Our extended offering will fuel that growth. Our model for serving customers is going to be much more customer-centric. We will use loyalty schemes, and our distribution models in general, in terms of delivering this, is going to be quite innovative compared to our peers in the industry. When possible, we will also add businesses which might be adjacent or supporting the core. Bottom line, we will make sure that we have an annual deduction or increase of productivity of 2%. We'll push marketing expense in growth regions, and that's going to be different from how we actually get out the fuel of the growth in the maturing market, which is going to be more customer-oriented. And we will look over and improve the differentiating of the pricing scheme. So these are the goals, or the parameters, and the actuals you see on the board. Gross winnings of 75 for 2006, whereof the maturing markets, as defined, Sweden, Denmark, and Norway and Finland, stands for 45. The rest is 30. And EBITDA is 43%, 2006, with a return on capital for 33%. Going forward, we believe that we can more than double the top-line growth, especially since we think that the balancing of the portfolio is going to be different, where previously new markets stood for 46%, and going forward, we think that's going to be over 55%. Margin will be less because we actually need to spend wisely marketing to fuel the growth in certain regions. But the return on capital will be higher, giving a different view on the capital structure, especially in terms of cash flow versus gross winnings. In addition to the profit and loss, we will seek, as said, innovative financing when needed. And the guidelines here, which is very restrictive in order for us to keep a solid balance sheet and a secure continued cash flow generation, is going to be 2 times EBITDA as maximum. On the value side, as stated in previous press release, we will try to get up to, or the dividend policy will be up to 75% when the objectives is met and the capital structure allows it. And finally, just to make sure that everybody understand that the commitment from this management group is to actually deliver superior returns. If you look at from 2004 to year-to-date May of 2007, the average of peers delivered 120% return to shareholders, market appreciation, and dividend. The best one had 307, which is an outstanding number. However, Unibet delivered over 500. And this is going to be very important for us going forward. Whenever we make a business decision, this is going to be on top of the mind of the management group to deliver continuously high return to the shareholders. Thank you.